Yes, today we are going to see how we can identify penny bar candlesticks depending on technical indicators. When I say technical indicators, I mean the market bands. In simple terms, it is called the market bands strategy. This strategy was developed by a technician called Bollinger, and someone may ask, what is the importance of such technical indicators? We can see that using technical indicators will help us or will help us to increase our profitability while trading both ranging markets and trending markets. But you have to put this in mind. I am not telling you that you have to focus on indicators to generate signals, because these market bands will never work for you. But if you combine your price action strategies with the right indicators, you will be able to filter your signals and trade the best setup. One of the best indicators that traders use to confirm entries or examine the range bond markets is what we call the Bollinger Bands indicator. This technical trading tool was developed by a technician called John Bollinger to measure the market volatility. Of course, the market bands are used to measure what we call the volatility of the market. And what you have to know is that this strategy is very simple, and what you have to do is to combine the horizontal support and resistance with the upper and the lower Bollinger bands, or what we call the false breakouts. And if the prices are rejected from the major key levels from the bands, this is a confirmation that the market will bounce from either the support or the resistance level. This can be seen in the illustration. So we have the bands, the market bands that we are seeing. Yes, the Bollinger bands are highlighted in the blue color as we are saying. Those what we call Bollinger bands, or what we call the market bands. So we are having two penny bars, the one at the support level and another one at the resistance level up. So the kind of market is a range bond market because it moves in a horizontal direction. But if you try to look at the chart above, you will notice how the Bollinger bands act as dynamic support and resistance levels. And when the market approaches the upper or the lower bands, the prices bounce strongly. Therefore, if you see that the penny bar is rejected from a horizontal key level and from the bands, this is a clear confirmation to buy or sell the market. Therefore, the importance of bands is to help us confirm our entry. Therefore, if you see the penny bars being rejected either from the support or the penny, yes, if you see that the penny bar that is formed from the horizontal key level and from the bands is a clear confirmation for us to buy or sell the market. You can observe from the, yes, of course, this illustration that you are seeing right now has two penny bars, and one of them is formed at a support level and another one at a resistance level. And we are saying that if you see that a penny bar is rejected from either a, a horizontal key level, it may be a support or resistance level, and it is also rejected from the market bands, it is a clear information that we have to buy or sell the market. And this confirmation strategy is very simple, and it will help you to decide whether to take a trade or ignore the trade, because trading is all about emotions, and sometimes you can spot or get or try to find a nice penny bar signal in the range bound marks, but you will never find it difficult to make a decision to trade it. Another thing that you have to do is putting your market Bollinger bands on your chart, and you see that the signal is rejected from both the horizontal levels, I mean the support and the resistance levels, and from the bands. The bands just help us to confirm our signals, but we don't always use bands to get signals. We just use the bands to confirm our signals. So you don't have to overthink what to do next in case you have found that both the Bollinger bands and the signals are rejected. So what you have to do is to execute your trade and place your stop loss and the profit targets or the take profit points, and then stay away and let the market do the work for you. So with the market bands, we just use them to confirm our trade entries or the orders, and once you confirm that the bands are in the line with the trend, you just have to place your stop loss and the target profits, or what we call the take profit points, and then we just observe the market. This is another illustration that we can use to master the market Bollinger bands. Of course, we are seeing the bands and we have our penny bar formed at resistance level. So from the observation, we are seeing that the market is a ranging market, and we are seeing a pullback at support level. And therefore, when you try to observe the illustration, we get to understand that when we use the market bands, we get satisfied with our opinion of taking a particular trade. It may be a trade order from a market trend, which may be a downward trend or an upward trend. But in most cases, the bands just inform us how to place our trade and to confirm if our signals are affordable. So from the observation, it is a daily chart, and it shows how the market band indicator can help us execute our trades with confidence and a first break out of the resistance level that was made by the penny bar, and that the formation of the penny bar was a powerful signal for us to short the market. It means that this trade order was confirmed by a false breakout of the upper band as well. This can be observed in the illustration. So we are seeing our pin bar formed at the resistance level, and we are seeing the bands are trying to confirm our trade entry, and at this point, when you try to observe the market bands, they indicate a sell signal. Therefore, at this point, a professional trader is expected to sell the market. You also have to remember that this technical indicator is used as a confirmation tool only and only in range bound markets. As I told you, you don't have to use it to generate trade signals, but you have to just use it always in combination with the horizontal key levels, the support and the resistance level, and you will see how this strategy can effectively affect your trading account positively. And in conclusion, I always recommend you to participate all the strategies as much as you can before you can open up your trade account and funding it as usual. This video marks the end of the penny bar candle strategy, and in our next videos we are going to be looking at what we call engulfing bar strategy, and under that we shall be seeing the physiology behind its formation and how we can use the engulfing bar candle formation both in the trending and in the ranging markets. And we shall also get to learn the entry points in the market, especially when trading the engulfing bar candle formation. Thanks for watching. Have a good day.